The Trade Finance Podcast is brought to you by Mitigram, the leading market network in trade finance. For more information about Mitigram, visit mitigram.com.
Welcome to today's episode of the Trade Finance Podcast hosted by Mitigram. My name is Johan Egnell. I am the head of Asia for Mitigram. And today I am happy to say that we have Josh Kroeker from Contour as a guest. Welcome, Josh.
Thank you, and happy to be here.
Great to have you on this podcast. How are you?
I'm very well, thank you.
Great.
It's been an exciting year, but as we were just saying, there's lots to do.
Yeah, which is a good thing in our line of business. Let's start simple. Would you mind introducing yourself?
Sure, yeah, happy to. So I'm the Chief Product Officer of Contour, and I've been working with this company since its beginning, really. And it started off as a bank consortium. A number of banks got together looking at how they could drive the digitization of trade agenda. At that time, I was working for HSBC, leading a lot of their efforts to digitize trade using emerging technologies like blockchain. And after a couple of years of working as a consortium, a number of banks got together and formed the company, and I ended up joining their management team. So it's been quite a journey, coming from experimentation and proof of concepts and working as a consortium all the way to having a company and scaling up. But it's been an exciting one.
Yeah. In the industry, we read quite a lot about Contour. Would you mind just describing a bit more in detail exactly what you offer and also what stage you're in right now?
Yeah, absolutely. So I think the first thing to realize about Contour is that Contour first is a network. So rather than maybe a platform, which is a typical way of providing a digital service, what we do is we operate a network of banks and corporates. And we allow those banks and corporates to come into that network. We give them a lot of flexible options in terms of how do they want to host their data on that network. It's using a decentralized technology, which is R3 Corda. And then what we do is then we give applications to that network to ease different processes around trade finance. So we've started with providing an application around the letter of credit. We believe the letter of credit is a common pain point for the world of trade finance. It adds a lot of value, but it's quite a complicated, paper-driven process that can be quite challenging, especially if you're a newcomer. And what we've done is we've built a sort of an optimized workflow that's fully digital for the existing product, using the same data standards, using the same sort of ICC controlled process. And that's our first sort of application. So Contour is really about growing this global network of banks and corporates and then giving them applications so that they can then ease the process of trade finance and grow trade finance.
Great. You mentioned that you've gone through the POC and all that part. Would you say that you're live at this stage, or is it still sort of developing?
Absolutely, that's a great question. So yes, we are live in production. We went into production in late last year, so late 2020. Our first live transactions were in early 2018. So I think that's sort of beyond the proof of concept, but these were sort of standalone single transactions that we use to get feedback to then continually improve the process. But now we have the entire company up and running. We have our operations teams. We have our production network up and running. We're doing production transactions today. We have over 10 banks in 22 countries ready to do and support live letter of credit transactions in production.
And in terms of where are you based, Contour?
Singapore.
Singapore.
So
okay.
we looked did sort of a global search to see how we want to sort of base ourselves and sort of have a headquarters. Of course, we're a global company, but looking at trade and trade finance, Asia, of course, is a very important market. And we're really happy with, the support that we've received here, both from the government, from the banks, from the corporate community. And it's sort of a great hotbed of innovation we see as well. That's closely linked to trade and trade finance.
It's interesting to hear you talk about Contour more as a network than a service or a platform. Why is that? Why do
So
you
I guess,
describe it like that?
yeah, so I guess if you go backwards to the problem that we were trying to solve, and I think all great companies like yours, look to solve a problem. The problem that I think we were looking to solve, if I go back to my banking days, was how do we build a global network? As a single bank, it's very challenging to build a global network that everyone want to use because, of course, you have competitors, and competitors are not very likely to use a competitor's network. So you look at third-party solutions, and third-party solutions are great at offering value for certain processes. But if you want a network to actually digitize trade transactions, that means that platform could have, if it was centralized, all of the data of all the trade transactions in the world. It's a very unlikely outcome that the industry would ever accept that. We have a lot of regulatory environments around the world where certain data has to stay within a certain country, et cetera. So we decided to take a network approach and say, let's enable the world to do trade in a digital way by creating this decentralized network. Everyone can be part of the same common network. Everyone can have all of their sort of trade transactions fully synchronized between each other, but everyone can keep their own data and have maximum flexibility in how that data is used. So that's why we consider it a network. All of the data is not in one place. Contour has no data. If you ask me what the dollar value of, how much transactions we've done, I couldn't tell you because, we don't have access to that data. The only data that we get is enough to onboard banks and members into the network. And then, of course, to track the number of transactions, which is for billing purposes only. So that's why we see it as a network. Everyone joins the network independently. They can choose if they want to have Contour provide the solution as a service. So we do have that for sort of maximum flexibility. But you'd be surprised. Many of our users actually choose to host their own data. They can do an on-premise installation of our application, or they can choose any cloud provider that they want, and that gives them the flexibility they need, both for their business and their regulatory environment.
I think on a personal note, I think it's a great just focusing on the network rather than the product is in trade is especially important. I mean, anyone could certainly build the functionality needed to support the letter of credit, but if you don't have the network behind you, there's no worth to it. There's absolutely, and it's useless, completely useless unless you have the network. So
I think there's been lots of great trade solutions that have been out there, over the years, and I think the scale has really been the challenge. How do we scale this to the scale of global trade? And that's why we think this technology is really an interesting one that sort of has unlocked this sort of new potential of building a global network without having that risk of someone controlling them.
How difficult is it for a bank or a corporate to actually set up and join Contour, both when they host it themselves, as well as joining you from this software as a service where you sort of host it for them? Because I feel sometimes speaking to the industry, people are afraid of the onboarding is too much. That's why they're not joining perhaps different initiatives. They prefer to wait and see, while maybe the industry itself would benefit from having more and more banks and corporates just joining and try and learn and contribute. But I guess the ease of onboarding is one factor that could help you as a network to grow, and certainly something we have seen from our side at Mitigram. We're quite easy to onboard, which helps in the conversation of converting people that are interested into actual users.
Yeah, it's the most important thing you can do, right? I think you'll find a very large pool of banks and corporates out there that are willing to experiment. They're willing to do sort of a free proof of concept, for marketing reasons or to learn about a technology or anything else. But really getting them to onboard to a commercial production platform is quite different, as you know. So that's really been the focus, I would say, of the last year or so, is how do we make Contour as easy as possible to adopt? So that's one, having a very clear, business case in terms of this is why I'm joining, this is the benefit I'm going to get by joining, and making sure that people really buy into that. And I think we've had a lot of success doing that. And two, then giving maximum flexibility. So, because we started as a bank consortium, I think we understand the internal process that a bank goes through to onboard to a digital solution. And we've built our solution and all of the processes, whether it be clearing, IT security, clearing, regulatory compliance, legal, all of these different things. We have sort of an optimized process that we sort of have all the answers to the typical questions, I would say. And I think that's the most important thing. If you want to go and sell your solution to a bank, you need to kind of have this database of answers to the 500 questions you're going to get. And I think we've done that quite well. And I think banks also look to see, who else is using it, who else has onboarded, and it gives them a certain amount of comfort and trust when you've done that. So, I give a lot of credit to our, sort of founding banks for sort of leading that way and, helping everyone else then on that process. So, yeah, flexibility, being able to clear all those barriers, and also be able to prove that you're going to add value to their business by doing this.
Yes. You mentioned that, I mean, it was a bank consortia from the beginning, and you credit those banks. Is there a risk that you become too bank focused and not, I mean, because banks in reality, banks are supporting corporates and traders in trade, and that's what they do. Yeah. So without the corporates and traders, there's no network, there's no value really. Is that something you need to balance between your perhaps banks that were there from the beginning and adding functionality more for corporates?
Sure. Yeah, no, I think it's a great question. I think it's best to look at the world of trade finance as there's providers and there's consumers. So both banks and Contour are aligned in providing a service to a consumer, which is a corporate. A corporate is always going to need to consume a trade finance product, whether that's a loan or a letter of credit or any of these different products, and they're going to need to have a channel to do that. So what banks and Contour have aligned to do is how they can provide the best possible solution to the corporate. So the business case is actually very much aligned in terms of how do we provide the best possible service, solution, experience to make sure that corporates will want to buy it. So the entire value proposition, I would say, of Contour is aimed squarely at corporates. So just because we're bank owned doesn't mean we're bank focused. In fact, I would say by joining Contour, the corporate gets the bulk of the value. The banks will get value in time as more corporates use it. So actually, it's more aligned than a lot of people think. Having corporate ownerships doesn't mean that you're going to be more corporate driven. I would say that because we're bank owned, we're actually very much aligned in providing value to that common client, which is a corporate.
Yeah. You came from HSBC and joined Contour. What's your view? Do you think that this change in trade finance that everyone's talking about, that everyone's expecting to happen, will it come from third-party providers such as Mitigram and Contour rather than from the banks? What's your view on this? I mean, because you were trying to digitize from within the bank, I assume, but you left for Contour.
Yeah, no, it's a great question. I think I've sort of made my vote clear with moving over, but
you're a bit biased today.
I'm a bit biased, but yeah, no, it's a great story because I've been looking at digitizing trade, I guess, going back 7 or 8 years, and when I started on that journey, it was very much internally focused. So HSBC, of course, very large global trade finance bank, and there's a lot they can do, within their own network, and that was the focus. But you hit a wall with that. After a while, you realize you can't add any more value to the process because you're only dealing with one half of it. And the other half of it, while you'd like it to be, of course, the same bank on both sides, you can't control that. And you don't want to control that for your clients. And you also have to be aware that even if you might have a client relationship, you're very rarely having 100% of the wallet of that client relationship. It's a common known fact that corporates deal with multiple banks, especially with trade finance. And ignoring that, I think, that doesn't help you. You need to, again, meet that client need. So it very quickly became sort of realized that this was not a problem that any one bank could solve. So your immediate solutions then is, well, who is going to solve it? Who is going to own the future of trade finance? And it was quite clear that this had to be a sort of an independent third party. And there's lots of value in actually having an outside party do this. They can be much more nimble, they can be much more innovative, they can move quick, they can do different things because they're, they're not a regulated bank. They can be a trade finance technology provider. And then it just simply became a question of, do we just want to buy a service, or do you want to own a service? And I think this has been a big change as well, in terms of banks are starting to think a little bit further in their future. And you've seen investments in different third-party platforms. It started with sort of the venture capital arms of a lot of banks looking into third parties, like TradeShift and things like this. Banks would take an ownership stake in. Your company included, I'm sure as well. Banks have been interested in. So that was the beginning. And then, once sort of blockchain came out, it started with these consortiums, and it was really saying, okay, well, we can actually own the whole thing if we want to collectively as banks, and that's kind of what a consortium is. And we experimented with that a fair bit, in Europe with WeTrade, and Hong Kong with eTrade Connect, and then eventually with R3, and then with Project Voltron, which became Contour. And all of these different projects, again, it was early days, you're experimenting, but the idea was, owning the future in the same way that banks own Swift. They own their own infrastructure. I guess the problem with that infrastructure and taking it to a fully end-to-end digital state is that there's just not enough corporates in Swift.
No.
So that was the whole idea, saying let's build a global network a la Swift, but include corporates from the beginning and use the latest technologies to add the most value that we can and really drive digitization. And banks have an interest in owning that. I think there's some value in that as well. A bank can take a longer term view in terms of profitability. They don't need to have sort of a short term profitable solution. They're happy to invest in something over the longer term if they see it as strategic. So that can really help in changing the business model of trade finance platforms. They don't have to immediately go after the largest companies who are willing to pay the fees at the expense of sort of everyone else. The SME traders, the new traders that need to get into the market, but maybe aren't going to be willing to pay high platform fees. So I think there's a lot of interesting market dynamics that are going to change as a result of companies like ours. But we're still at the early days, so we're still sort of feeling our way through it.
Yeah, no, it's an interesting journey you're on. In the industry, I think there's a tendency to worry about these digital islands coming up. I think there are a few that are growing, of which Contour is one. How will you? I guess for now, perhaps the everyone gets a large piece of the pie to grow, but eventually there will need to be some connectivity. How do you plan to address this? Because this is something when I speak to both corporates and banks, which horse do they bet on? You can't onboard everything. You need to. So this is a real concern, is my feeling.
Yeah, so I guess there's 2 points to that. So the first thing is, because there was so much excitement, there was this explosion of activity, which will follow sort of an evolutionary cycle. So because, if only one company was doing blockchain for trade, I'd be worried, right? That means there wasn't agreement that everyone thought it was sort of going to work and it was a good idea. But there's tons of activity, people trying different products, different regions, different ownerships, different governance. And I think that's natural and that's normal to have that burst of activity. I think what will happen next is that people are going to realize what's working and what doesn't. Banks who have backed multiple horses will sort of narrow that focus onto the ones that have the most commercial success, because you really want more applications and fewer networks. The more networks you have, the more disconnected systems you have. It's very unlikely we're going to get to a place where all of these decentralized distributed systems are going to seamlessly talk to each other. They're actually built to sort of not need to do that because they're decentralized. So they want the networks to sort of grow more naturally. So that's one thing. There's going to be a bit of a thinning of the herd, I would say, to where only the networks that sort of add value and are growing or having success will exist, and the banks will focus on those. The second thing is that no one network can do everything for a client. When we speak to a corporate or even a bank, digitization is not one thing. If you look at the trade process, it's not just trade finance, right? Trade finance is just a segment of that process. So if your goal is digitization of trade, you need to think about the platforms that you join and the networks that you join a little bit differently. You're probably going to need to join more than one. Right now, the trend that we see, if you go to a corporate, say in the energy space or the metal space, they want to join sort of a marketplace where they can actually do their business. They can actually do the trading, post-trade settlement, arranging shipments, and all of that. And there's some great platforms that are out there doing that. If that transaction needs to be financed, maybe a letter of credit has been issued, et cetera, they want that data to seamlessly go to a network like Contours.
Yeah.
And then finally, they need the evidence of the physical supply chain to come through Contour to prove to the banks that the delivery has been made and the shipment's been the title's been transferred, et cetera. And this is where we have sort of the physical supply chain networks with electronic bills of lading, port and customs easy release. These are networks that are adding a lot of value to those processes. So if you're a corporate, you're sitting there saying, okay, I need to join a trade finance network. We think Contour is the best one. I need to join some sort of marketplace, trading network. Mitigram's doing some interesting work in this area as well. I think it could be an interesting process where maybe you use Mitigram that then flows into Contour. There's all of these different opportunities, and this is what excites me about interoperability, because people thought interoperability was, these two networks are just going to merge together, and that's not what interoperability is. A decentralized network has no center. You can't connect the two networks. There's only participants. So how do you connect participants? You go to that intersection, the individual participant, and if they join the networks that they want to be a part of, and then we work together as sort of collaborative networks where that are complementary. Using APIs, the data can flow between that company's data can flow between their different networks and network memberships very seamlessly.
What do you say to those who think that it'll never work, you'll never get enough players to join these networks? For those markets where it's mostly needed to have this digital network or a network of trade finance, like South Asia, Africa, they will lag behind, and without those parties, there is no benefit to it anyway. Do you have an answer to that? Because I mean, often you see there are the same banks trying these new things. There are some well-known corporates also involved in a lot of POCs and early adopters. Yeah. So I guess you will say to me now that no, sure, we will address that. We will have them on board. How will you do that? How will you manage to do that? How will you scale up now to actually have a proper network?
Yeah, well, I think this is the challenge that we were created to solve. We didn't just wake up one day and decided to disrupt the industry. We've been tasked, I would say, by the industry to solve that problem specifically, and we've been designed to it. And it's funny that you mentioned sort of Africa, South Asia. I think those are our two most exciting markets right now, where we have the most traction. Okay. I get more banks in South Asia and Africa calling me every week than almost anywhere else on the planet. I would say they're almost going to be the leaders in digitization rather than the laggards. So, that's sort of one thing we'll say. And you have to look at, again, the platforms and networks that are in production and actively adding people. That's an amazing hurdle to overcome. And the ones that are doing that are going to be successful because it's in everyone's interest. The momentum of digital trade is not going to stop. We're not just going to get to a point and say, I guess it's not going to work. Let's just keep using paper forever. So it's just about, making sure you're nimble, making sure you listen to the customer, making sure you're able to sort of adjust your course as needed to achieve that goal. But that is 100% the goal. And I think we're well on our way. People aren't going to give up at this point. So we just need to make sure that we're nimble enough to get there. And we're seeing amazing things happen right now.
Sometimes when you speak to people in the industry, especially within banks, they say that we're hard to change. We're a stubborn bunch. Trade finance is especially in that way. Is there is there any truth to this, you think? Is there a need for sort of a new generation to come up, or is it more the underlying business and how it's been done that has stopped trade finance from digitizing, say, compared to FX and rates and all the other treasury products?
So I think that there is a generational change underway for sure. Change happens one retirement party at a time. But there's also this challenge that's been cracked, and the challenge was, how do you build a global common network? How do you deal with ownership? And I think decentralized networks have really cracked that major systemic problem. And then I think the generational change, and even things like the global crisis with the pandemic and COVID-19, it's made people think about digitization in terms of business continuity, not just the value of digitization and other things, but really that we need to do this, but because we cannot rely on paper flying around the world and people sitting at their desk ready to receive paper. We need to accept digital signatures. We need to have networks in place that can manage global trade in the event of events like COVID-19. So I think the generational change, the technology breakthrough, and all of these different things are just leading to, again, a momentum that will not be stalled. So we're a large ship, to use a sort of a way of thinking about trade. And we've started moving in a direction. We're hard to turn, but once that momentum gets underway, it's hard to stop. And I think we're well on our way. The other thing is, you can't really focus, I would say, on the laggards. So there's an old graph of where you can of how innovative technologies are. You've seen it. Yeah, you focus, right? You focus on the early adopters. And
but I think that, I mean, that's what that graph. I'm not sure what it's called, but it's the great chasm. I think you have to make the jump from the early adopters from the early innovators or something to the early adopters to get the mass. So I guess there's quite a few of us aiming to do that now, and it's quite exciting. I think. I mean, the narrative we speak about at Mitigram is that doing business and digitization and globalization has changed. How it has changed how people do business, how they find buyers and sellers. But trade finance hasn't really catched up. It still relies on old processes, and in order to just keep up with this digitization of how just business is done, trade finance will inevitably have to catch up. And it will, given that trade finance is lagging, it will be quicker and faster once the momentum starts. Like you said, when the ships start sailing, it'll be quick. We'll catch up with the rest of the corporate banking world. So we see it now. We do the groundwork now, and then we see the pace picking up as well. And not just for us, I think certainly for you as well. And there's a focus in the industry now to find solutions. When I joined Mitigram 3.5 years ago, there was a lot of talk about blockchain, not too much talk about what actually the outcome would be. Now there's less talk about blockchain, but more talk about the actual benefits and the value that it brings, and that it's already bringing to the industry. So I see there's a shift, and I'm quite excited about that, to be honest.
Yeah, no, it's true. We talk less about blockchain and more about scale, and it's
technology is just a mean to an end. I mean, there's blockchain in itself has no. I mean, you have to do something about it, and you have to bring some value, and you can do it via blockchain or anything else, but. And now it seems blockchain has a place. What's your view on partnering with other solution providers? We've seen in the news that you partnered with some, the e-bills of lading providers, and some, I think, also some on the physical space, perhaps. How do you pick and choose? Because we as well on our side, it's not always easy to find who to partner with, because APIs is good, but it's not as easy as people think to just hook up to another system. It requires work. So how do you deal with that?
So first of all, partners are a key part of our network. I should actually clarify my earlier statement. I said we're a network of banks and corporates. We're actually a network of banks, corporates, and partners. And in terms of how do we choose partners, we don't. Our customers do. So when I said before, we talk to a corporate, you have to think about, what networks do you need to be a part of? That's usually what leads to the partner discussion. So we have a corporate client say, hey, we love Contour for the trade finance process, and we're currently using, SDocs or Bolero or Wave or an EBL solution to manage our electronic bills of lading and our sort of physical supply chain. We would love these two things to work together. Well, there's a great motivation, to partner, because you can solve a problem for that common user, and you can make that process as seamless as possible by working with the two companies. The same thing with a bank, right? A bank will say, okay, we want to use Contour for all of our outbound, our external transactions, but we need to record all that information internally. We're using, an internal system for, all of your core banking processes. How do I make sure that data comes in? You can partner with the companies that are doing that, or partner with system integrators who can help them with that integration journey, because that's where a lot of banks are going to see value creation as well in terms of that integration. The same thing with the corporate trading platforms. You say, the end of my process is the beginning of yours.
Yeah.
It makes perfect sense to have a button at the end of my process saying, send to Contour.
Yeah.
And we enable that. And, again, it's not something that we're connecting the two networks. We're now allowing that common client to authorize data to move from one to another. And that's really powerful, because if you're a corporate user, the last thing you want to have is, retyping data. It allows for errors, and it's just an annoying process. It shouldn't work that way. With these integrations, you can have memberships in all of your digital platforms, and the data can be seamlessly transferred between it, as well as you can view it through different users.
Yeah, that's a big thing for us as well now, to actually hooking up with and then I think Mitigram, we're at the early stage, and it makes sense to shoot into a different system. So I'm hoping we can work with Contour on that. I've seen you've done a talk with ICC, and I know ICC out of Singapore or everywhere, they are very much trying to drive for digitization. What's your view, and what's their view on what is the big hurdle that needs to be overcome?
So I think that gap you mentioned, right, to go from the innovators to the early adopters and the fast followers, et cetera. I think that their focus is, once that ball starts rolling, we need standards in place, because standards are really going to accelerate that adoption through the mass market. Lots of innovators will join multiple solutions, all different standards, and they'll be fine with it because they're learning, they're experimenting, et cetera. But if you want to start actually thinking about the global scale of trade, you need standards to be in place, and you need that for a number of different reasons. But first and foremost is that it just makes it so much easier and faster to adopt solutions when you don't have to adopt somebody else's standards. So we see that as a real common problem to solve, in terms of, Contour doesn't want to create standards. We don't have a standard process. We don't have a standard way of doing trade or even fields. All of our standards come from the industry. So a letter of credit is not a Contour letter of credit where you have to come to Contour if something goes wrong. It's a UCP letter of credit, right, which is governed by the ICC. All of the data fields are MT data fields, right? And maybe, if the industry moves to ISO 222, then great, we'll adapt our fields to match that standard. So all we're looking for is for the industry, and the ICC plays a large role in this, is choose some standards, and we will map to that. And you're seeing this across everywhere. Even electronic bills of lading. The history of electronic bills of lading is every new company creates its own standard, its own legal standard, its own data standard, and then they're all disconnected, and none of them have scaled. They have success in, with the innovators, but that chasm, they haven't jumped. If they all agree on a standard, I think that chasm can be breached, and I think that could lead to, the widespread adoption. And we're really interested in that, because a digital letter of credit on Contour is good. A digital letter of credit on Contour with an electronic bill of lading is great.
It's great. Yeah. Yes. No, I think ICC is doing great work there. I think they have this data standard initiative, and it's be interesting to see what comes out of it. I know they have a sort of a 10-year view on it, and that's probably the amount of time it needs to properly come up with a global standard and to really digitize all of what we're trying to do. But 10 years in the grand scheme of things is nothing. Last question for me: what's the focus for Contour in the next 1 to 5 years, would you say?
Sure. I would say scaling. So I think we have, the base product that solves a common problem that people want. We just now need to deliver that at scale. I think the value of any network-based solution goes up as the network scales. So that's really our focus. I think from the product side, we're going to start doing some interesting things. So our focus to start with has been transforming existing processes, again, to lower that barrier to adoption. But we're also going to be launching, a lab towards the later part of this year to start thinking about what are these future trends, what are the major trends that are going to impact trade and trade finance over the next 5-10 years, so that we can start and lead that conversation through experimentation, engagement with the industry, and choose the best ones really to then plug into our network and offer those solutions. So, we're going to really be coming at this from 2 angles in terms of growing the network on our base offering, which is about transforming existing processes, while leading the industry on the experimentation of these future trends that are going to have a big impact. This could be sustainability, it could be supply chain resiliency, it could be new payment methods that are fully digital and enabled through IoT devices on a ship and a smart contract, things like that are not the way trade is done today, but maybe that's the way trade is done in the future.
Thank you very much, Josh. Been very interesting to have you on this podcast. I think both Contour and Mitigram are in great places at the moment. We'll see more from both of us, and I really look forward to see you guys growing and what we will do together. So again, thank you very much for joining. It's been very interesting listening to your thoughts and your view on the industry. Thank you.
Yeah, no, thank you very much, Johan. It's been great.
Okay, brilliant. Thanks.
The Trade Finance Podcast is brought to you by Mitigram, the leading market network in trade finance. For more information about Mitigram, visit mitigram.com.